an absolute bloodbath out there within both the crypto and the stock markets. We're seeing yet another day of forced liquidations across the entire board. Red, a sea of red absolutely everywhere. And it's just a matter of when does things bounce, right? When are the cryptos going to bounce once again? When is the stock market going to bounce? In today's show, we're going to have a look at how bad things could potentially get. We're also going to have a look at some strategies that you can implement to potentially protect yourself and hedge, but without actually having to sell your spot crypto asset. So stay tuned till the end of the show. Smash the like button, hit the bell notification, and subscribe to the channel. And let's get straight into the show content. You can see yet again another mass series of liquidations, now actually surpassing the $1 billion mark. And the last time that we saw that was actually on this candle over here, which was on the 9th of December. We had that $1.7 billion worth of liquidations. Nothing compared quite to what we're seeing in the stock market, which is actually in the trillions. Very, very severe wipeout in that sector. And I think really crypto is looking to the stock market to see what the stock market does next to determine when it is actually going to find major support and bounce. It's almost as if a lot of the technical levels are falling out of bed. And that's why we need to focus on the high timeframes. You guys have heard the saying before, when in doubt, zoom out. When in doubt, zoom out. Look on the high timeframes. Extreme fear over here within the stock markets. And there's even the possibility that you may get a government shutdown. This just came in from Reuters. You can see spending bill backed by Donald Trump failed in the U.S. House of Representatives. Dozens of Republicans defying the president-elect and voting it down. Without it, the government faces a shutdown, which could happen obviously at midnight. So big spikes over here in the VIX volatility index running towards the upside. Remember, generally when the volatility, the VIX or the volatility index spikes up over here, we tend to see the stock market pulling back aggressively. So watch as it comes. If it does actually make it as high as that 52, 53 level, we've technically seen major support levels found when you do get into those zones. And we saw that we timed it actually with the previous cycle in late July, at the beginning of August, when we saw the VIX spike to that 53. That was the third highest spike that we ever received, and it actually marked the exact low over there. But things are a little bit different right now because the stock market has rallied to insane heights. We've been on an absolute giga bull run. You guys know that we follow the 18.6-year cycle, and we're coming towards the end of that, right? The end of 14 years of just up only. And at some point soon, something's going to crack, right? Something is going to break. So when you look at the stock markets over there, from a technical perspective, well, we're breaking the at least the rising wedge over here, which is traditionally a bearish chart pattern. Now, when those rising wedges break, oftentimes you're going to target, that's going to be your first area of support. And after that, you can target a whole lot lower, right? So the question is, how low are we actually going to go? How low are we going to go? Dow Jones is approaching key levels of support. You can see NASDAQ is looking pretty weak over here. It's probably going to drop down to about 500. And then we, of course, have the S&P 500 futures likely to head to that 5,700. So there is more downside ahead of us. It's just a question of, are we going to experience this for the whole of next week? So not quite the Santa rally that many people were waiting for, the Christmas rally for the end of the year. The only thing that really seems to be going up over here is the DXY, right? The dollar index breaking out of a very, very significant range. And we've been looking at this for quite a long time, asking ourselves, is this macro reaccumulation or macro distribution? And as long as it continues to remain above the top side of this white line over here, which is about 106.5, there is really the real chance that this was macro reaccumulation and this is going to head high. And that makes a difficult time for any risk on assets to rally. Generally speaking, we want to see this deviate and move down in order to make an easier run for the rest of these sectors. So we'll also talk a little bit about gold in today's show. We do have a special guest that's going to be coming on to help us to see how we can best trade options and protect ourselves in this environment. Gold has been maintaining this upsloping trend line. Remember, we took the long trade on gold, that absolutely mammoth run pretty much since the lows over here all the way to the top. That was a measured move based on the cup and handle formation. We hit that to perfection. We closed the gold trade out. But is this the time to start to look to a flight to safety and possibly consider taking out at least some trades on gold to hedge our crypto portfolios? We'll talk about that in today's show. When it does come to options trading, which is, of course, what our special guest today is going to help us with, it's always important to establish those positions if you can during periods of low volatility. This just simply gives you a better price point, because when nobody wants to take the trade, that's typically when your options prices are at the absolute cheapest. And in hindsight, when you have a look at this in hindsight on the high timeframes, the volatility is still actually theoretically low despite the prices coming down. So it could be a flush, it could be a leverage flush, and a simple reset in price. When you look at those Bollinger Band width percentiles, it's only really Bitcoin that's been moving towards the upside. ETH is still relatively flat in terms of its volatility. And the way this simply works is it looks at the Bollinger Bands and the width of those Bollinger Bands as price tightens in a trading range. As it currently stands, remember, we do still have these bullish cup and handle formations in play. They haven't been fully negated yet, right? There you got your cup, there you have your handle. You're kind of just chopping about and back testing. And because ETH has been within a pretty tight range, the volatility still remains low. So there may be some options that we can take out on there, still betting on the bull market continuing, maybe just pushing it a couple of months further ahead than what we originally thought, meaning that there's still an opportunity to get the long trade on without actually taking too much risk. And we're looking at a measured move over here at the very least to about $5,000, right? So that is for ETH. We have Solana as well. We're looking to trade Solana up to at least $400 before getting very, very cautious in how far this bull market has actually gone, right? So we'll have a look at all of that and a whole lot more today. When in doubt, zoom out. So in terms of the monthly scale, we did cover this very, very briefly yesterday, and we spoke about how you create these order blocks, right? You create these big fair value gaps. We saw one previously where Bitcoin had come into this key level over here, and ultimately everybody thought this was a real breakout. We're not coming back down again. And of course, what happened? Well, if you look a couple of months further ahead, these wicks came perfectly into that fair value gap, testing it, holding it as support, creating the next macro high low, and then running it back up, right? So could we be doing something similar? I think it's a real possibility. Your major support levels for Bitcoin are going to be coming in the middle of this fair value gap at around that $82,000 level. So we can talk about some more precise levels in just a moment's time. Let's just first lay the foundation, and then we'll bring the guests on as well. In terms of our short-term bubble risk, remember, we haven't actually seen any of the heated territory that we previously saw. When you actually zoom in and you have a look at this time period over here, we've mostly been in neutral territory through the majority of this rally, right? Ever since Bitcoin came all the way down to that 49K lows, and then it rallied all the way up to, of course, the $106,000, $107,000 highs. The furthest that we got in terms of our risk metrics is the 1.25 to 1.5, which is the yellow levels that are presented on the screen, bouncing on and off there. So when we reset the zoom, just to provide you with some perspective over here with the other times, well, this is still relatively early in the cycle. From a cyclical perspective, we're only about 65% through the bull run in terms of timing. And this matches what we're seeing actually in terms of the bubble risk. We expect that the time period where we want to start to become really cautious and careful within this bull run is when we see that 1.75 to 2 or above the 2 mark that has historically marked all of our prior tops within the cycle. And we haven't seen that yet, right? In fact, our return on investment from the cycle lows suggests that everything is business as usual. You can see we're currently following the purple trajectory, or bouncing on and off the screen again over there. And the green line over here refers to your 2021 cycle. The orange line was your 2017 cycle. And history doesn't always repeat, but it definitely rhymes. And according to this, we still have a long way left to go, approximately between 250 and 300 days left before the end of the cycle. Now, if that is the case, well, we need to look to see if we can take some trades, if we can take some options trades as well without taking on too much risk. Before we do bring the guest on as well, pause this video, make sure that you use the link in the description below, sign up to Deribit so that you can take these trades with us as we do go through them bit by bit. So we're looking at that over there. Now, in terms of major support levels based on the price action chart that we're having a look at over here, we identified the predominant key level of support would be at this $79,000 zone. And the basis for that is essentially looking at our Fibonacci range levels, where we mark from the ultimate lows over here, from the 49K lows to the exact high. If that is a confirmed local high on a weekly scale, we target the mid-range, which lines up exactly in alignment with our 21 weekly exponential moving average. That also lines up exactly to the literal tick, if I zoom in over there, with the stop and reversal indicators. So that is really going to be the sweet spot. Cautiously bullish so long as price action remains above these key levels, and possibly just a macro high low, delaying the cycle. Initially, part of the way that the price action was unfolding and the way that Bitcoin was moving, it was looking more like we were going to possibly even pull off some sort of a blow off top, with prices running into the $125,000 level. But this is probably a much needed pullback. Wipe out the leverage, set in your next macro high low, and then probably have continuation for at least 6 more months before we find the eventual top within the cycle. And cyclically, we know and we understand that the way that Ethereum operates is, at least we're expecting a very bullish Q1 next year for Ethereum, especially in a post-halving year. Remember, we're currently in a halving year this year, and then you get the post-halving year, and the post-halving year is where we typically see the bull market cycle tops occur. So to compare what ETH did in Q1 of those bull market top years, which is the post-halving year, we saw in 2017 a 518% move. We saw in 2021 160% move, and we're waiting for the data, of course, in the next quarter. So a lot of things to look forward to. If we look at ETH, if we look at Bitcoin specifically, what did Bitcoin do in 2017? Q1 was pretty lackluster gains, only 11%. And if you look at 2021, that was a post-halving year, 103% for Bitcoin over there. So still waiting for what we see in 2025, right, which is the post-halving year. That's the expectation for when that cycle should come to its end, right? So give or take about 250 days left. Let's go with the conservative case and say that it's 6 months, right? 6 months left. So we have a lot to look at. As long as the USDT dominance continues to rip towards the upside like this, it is going to be a really risk-off environment for crypto. And also, as long as we continue to see the Bitcoin dominance rising, this is a flight to safety, essentially. So without further ado, we're going to bring our guest on. Smash the like button, guys. Let us know what you're trading today as well in the comment section. What your thoughts on the market? Are you bullish? Are you bearish? Are you in or are you out of the market? And then we're going to bring on our guest, of course, Sean from Deribit, professional options trader. How are you doing, Sean?
Hi, good. Yeah, well, good considering it's quite a bloodbath out there, but it's always great for also the option traders. A lot of bearish kind of trades that are possible. So, but quite busy.
Yeah, absolutely brutal bloodbath out there. What are your thoughts? Do you think we're going to bounce anytime soon? And do you have any sort of advice or strategies, at least when it comes to what people can do to hedge and protect themselves, especially using options trades? I know that we were previously speaking about, the possibility of having gold at least as part of your portfolio. I guess, this is also going to cater to the type of viewer that's out there. We understand some viewers, may be trading with a couple of $100, and for them, they want to be in the casino, right? They want to be in the meme coin casino. They might lose it all in 1 or 2 trades, and they'll raise the funds again, come back. But this is more, I guess, for the astute investor, the sophisticated investor that's possibly trading with 6 figures, 7 figures. They probably should be looking towards, some of the things that you're about to talk about, right?
Yeah, so there's a lot of kind of things that are going on right now. I mean, with the Fed now announcing a slower pace of rate cuts, this is what triggered this kind of move. You've got this shutdown, as you mentioned, looming. So this could also like counterplay that with a bullish kind of aspect on Bitcoin. You've got that territory where, we've come from such a big bullish environment since the election. Will this carry on? Will this not? It's that uncertainty. And with that uncertainty, you've got options kind of playing into that perfectly. You can still have your bullish views, but protect it with options. So that's where you can do some protective puts as insurance. And I'll go through that in a moment. Or you could think, okay, I just want to keep buying more and more. This is a lower price to invest more in Bitcoin. You could, there's a bit for everyone. The main thing to understand is the risk you take. So it's important to know where are your break-even points, how much will you lose on a 10% move, 20% move, those kind of things. It's just, important to be aware of that, and also the probabilities of those kind of things happening. Like, what is the possibility that this can actually take place? We've seen Bitcoin have these crazy moves. I mean, when Bitcoin first reached 1,000, it had this big collapse. When it reached 20K, it had this big collapse. We've had these constant bull runs, which are followed by this huge correction, as it were. We've reached this 100K. Like, where are we going from here? I mean, it is also post-halving, as you mentioned. A lot of people, I think, forget that it's that was not that far away. And we've had so much with the BlackRock getting involved, the ETF approvals, with the US elections, with now this regulatory opening to Bitcoin. So there's a lot of kind of narratives for both the bulls and the bears. I mean, for the bears, I think people are thinking more on the MicroStrategy. This could potentially unwind. If this unwinds, it's going to be a big explosion or a big correction, let's say. So
that's what I think. That I guess to direct some of the viewers that may be looking for at least opportunities within the market. I think one way that I think about it as well for myself personally is that, as you get closer and closer to the end, which we can oftentimes see based on various different technical analysis techniques, and looking at the timing cycles, looking at the number of corrections. Usually what we historically see is anywhere between about 6 and 8 corrections, major corrections occur within a bull run. And as you start to approach that correction number 6 or 7, as we have now, that you're very, very, very close to the end. So I guess as somebody like myself, who's of course heavily invested into the market, predominantly in spots, and I got in very early, right at the bear market lows, when Bitcoin was around 16.2 to about 17.5, give or take. That was the majority of my entries. Now I'm looking to protect that wealth that I've made. What sort of steps could I take where, I could potentially, exit those positions completely and maybe move them into, a yield-bearing stablecoin? I know that you guys offer things like that, and then possibly still look to take out other options that could capitalize on the upside, should the bull run continue for another 6, 12, or possibly, even 18 months. I think that's unlikely, but 6 to 12 months as a ballpark figure. Are there steps that I can take using Deribit options? And if so, what would you suggest?
Yeah, so let me go into our position builder. So I prepared something actually before even this downticks that we had, but it still kind of holds. So what we have here is, let me build it up kind of slowly. So let's say now you have 1 Bitcoin, and you can change these proportions, like just for 0.1 or 0.5 or 10 Bitcoin or whatever. So you have this Bitcoin, and your Bitcoin is not going to move if you have no trades. But in dollar-wise, obviously, you're going to go, as we go up, dollar-wise, you're going to gain. As we go down, you're going to lose. So the idea is, how can we protect dollar-wise this drop, right? Now, if I start to, for example, buy a put, now immediately, Bitcoin-wise, you're going to start to have this increase in your Bitcoin amount. Now, just to take out even your long Bitcoin. So if you just buy this put, you're going to start to make dollar-wise as we go down, but this is a protective put. So you've actually got your Bitcoin, which if I take out this put, you'll notice this is your line. You, on a 20% move, for example, you lose this 18K. If I add in that put on this 20% down, it's reduced this dramatically. So this 10K kind of loss. But where we're going to build it up now is, so let's say you're very bullish on Bitcoin, right? You believe, you care about your P&L in Bitcoin. You really want to gain more and more Bitcoin. So what you could do is a very simple thing of buying this put. You're going to gain your Bitcoin on the downside. But the problem is, if not much happens or we go up, you're going to lose 0.1 of this Bitcoin on expiry. So where this purple line is. So this is where you want to start to be a bit more, you want to start to gain back some of that premium, because every time you buy an option, you're paying a premium for this insurance effectively. So this is where you might want to say, okay, I don't think we're going to go down below 70K. You could then reduce that premium. Now you've reduced that premium to 0.06, the purple line again. This is how much you're going to pay if nothing happens. And you might want to say, okay, I believe that we're going to top out around 120K, and I still want my upside. So this is where you might want to just sell half a Bitcoin or half 0.5 a contract. So again, now you've reduced it to 0.03, but you still have, when you look at this, okay, you after 30%, you're starting to lose your Bitcoin because of that call. But in USD, you still got that upside, because you haven't fully, if you will lose that upside if you do the -1 in dollar wise. I mean, you will still gain it until the strike, until the 120K. So this is just something that it maybe is unfamiliar for a lot of you, but you can start to play around with, like really start to think about.
Is the strategy tester available to the general public to utilize on Deribit's platform, or is that unique to you and what you have?
No, this is available for everybody. So you just go pb.deribit.com, position builder, pb.deribit.com. You don't even need an account. You can start to play around with adding these positions. You add your equity by just adding Bitcoin, and you just start to add in these strikes, these different expiries. You have to think about the time frame. So we're looking at, in this time frame, the March. So this is 3 months out, and yeah, you can still protect yourself from a 3-month out. You're going to be paying some insurance, and the idea is to reduce that insurance payment as well. So this is where you can also become even more bullish. You could just say, okay, I'm going to just load up on calls. I'm going to pay a lot of premium. I could even load up on calls and sell puts. And this is a very risky strategy. So just be aware of your risk, that you will gain a lot if we go up, but you'll obviously lose a lot if we go down. So you can leverage yourself a lot more.
Sure. And then let me ask you I'm going to speak for what I think is the majority of the viewers and the audience are mostly going to be people that are fully invested. So they're 100% long in the market. They're long-term holders. What is the most simple strategy that they could implement to protect themselves? They long, timing-wise, they're looking at exiting anywhere between, let's say, August and November of 2025 out of their spot positions. So what would be the most simple step that they could take using options to protect themselves in the event that they're wrong and prices obviously do go lower?
Yeah, I would say the put spread is a very, like something like this. I mean, even you can play around with these strikes. So this is, you're going to, from this 90,000 put, you're going to gain, and it's going to go until that 70,000 put, that, let's say, the protection. And you can play around with these ratios. So you could, if you have 1 Bitcoin, you could even go, like, if you're feeling a bit more, you want more insurance, you can start to buy 2 of these puts for every 1 Bitcoin you have. Or if you're looking at being a bit more, you could do something like this. It's a put 1/2. It's a put ratio 1/2. So you're buying 1 put with a closest strike like 90K, or you could go 80K, and then you could sell puts on the 60K, 70K kind of strike range. That's like a simple protective kind of put. And if you really want to protect yourself more, just buy a put. Just buy a put. It's going to be a bit more expensive as an insurance, but you still get the upside of Bitcoin potentially going to 150, 160 or more. So
sure. And then before we go into the end game, which would be exit strategies and what people can be looking at to do around that point in time, where could people go if they do want to learn more? Because we know the learning curve for options trading can often be daunting and confusing for a lot of people. Do you guys have any resources that you could send them to, which would maybe just explain all of this in terms of a blog post or something like that?
Yeah, we actually have also a very good options course. So just type in Deribit options course in Google and you'll be there. You can just, it's free to do it. You can just start doing the sections. It really covers the basics of options, and you can get more complicated in levels later on. It's a series of about 13 lectures and free for anyone to get into. So that's
amazing.
Something very useful. I mean, I would say start getting into options, because this is going to be a big thing in crypto. We've seen the ETF options launch. We're seeing more and more of your native crypto exchanges launching options. They see options as a big, I mean, first came spot, then came your perp futures kind of trading, and then comes options. And this is the same in traditional world. Like, crypto is going in that same direction in terms of popularity. Yeah. So I would say get savvy on options. Obviously, learn about it first before you start trading it.
Yeah, sure. And then just for the audience, I know that, Deribit is known as an options trading platform, but you guys do offer spot and perpetuals as well, which people can, of course, go there to trade. But let's talk a little bit about gold as also a potential hedge for, people with 6, 7, 8-figure portfolios. What is the, what can they do on Deribit with gold? Is it spot gold? Are they having to take out actual options trade on gold? What exactly can they do there?
Yeah, so we have gold, like Pax Gold on Deribit. So redeemable by actual gold. And this is effectively the best crypto gold there is. Like, you can really easily trade, send gold. It's on the blockchain. You can trade it in small amounts. You can trade options with it. What's really great about it is you can also use it as collateral to trade Bitcoin futures, options, your perp. So in times like now, where maybe you're thinking about reassessing your portfolio, let's say you're getting more bearish and you're holding 90% in crypto and 10% in stables, but you still believe in inflation. I mean, as Paul Tudor Jones said, all roads lead to inflation. He's long Bitcoin and gold. And you could, in the last week, we've had a 9% drop in Bitcoin, over a 9% drop, less than a 1% drop in gold. And if you still want to be, effectively long inflation, you can have a bit more of your portfolio in gold while still trading your Bitcoin options, while still trading your Bitcoin protected puts, or even you could start to buy calls against that, Bitcoin calls. There are a lot of different kind of strategies there. And we just recently launched this. So launching gold to use as cross collateral, but also we've launched options on gold. So you can start to do more on yielding. You might even find that yielding, so a very popular strategy is covered calls. And you'll actually find a lot of like there are some examples where you can actually get more of a yield on the expected move bands on Bitcoin versus gold. You can yield more on gold in that sense. So this is where you hold one Pax Gold and sell a call option on the expected move, like the strike on the expected move, kind of things like that. I mean, we'll put out some articles around that. But yeah, there's or you can just do very simple stuff, which is your cash and carry. So you have your Bitcoin and you can sell your March future, a March future on Bitcoin, and you could yield 11% on the dollar amount. Obviously, it starts to lock up that amount. So you might have one Bitcoin and you might say, okay, out of that, I'm one Bitcoin long, I'll sell 0.1 of a March future. So that 0.1 Bitcoin is now hedged dollar-wise, but you're going to yield 11% on it annualized. You have to obviously roll this future.
Yeah. So from my side, I mean, I'm somebody that I do dabble in gold every now and then, but more in the shorter term. Over a long time period, I'm personally way more bullish on Bitcoin. And I think that, one of the, the best trades that you can do is actually move from gold over the long term into Bitcoin. But in the short term, as you reach these peak euphoric phases, I like the idea of hedging, from Bitcoin into gold. And just basically holding that from basically top of bull market down to bottom of bear market. Gold's not really something I look at to, try and expand my wealth. It's more just protective measures, long-term safety. But I also like the idea of what you mentioned to me just before we went live on the show, which is about looking at stable coins that have yield-bearing properties. I love that idea. That's something that I'm looking at as well, where I can still remain, essentially crypto native with a crypto platform like Deribit, and possibly just move from crypto into Deribit, and then consider once the market does top out to at least still earn a little bit of yield on stable coins. And I guess that's just to more or less wrap things up and end off over there. How would that exactly work? You also mentioned that you may be looking to implement multiple different stable coins that provide these properties and opportunities.
Yeah, correct. So, I mean, obviously with your USDC, USDT, you've got a much longer track record. I think everyone kind of understands the risk profile there. But the problem is you're not getting any interest on that. In this high interest rate environment, that's where you're seeing a new generation of yielding stable coins, as it were. So we launched USYC hash note on the platform, and they pretty much use overnight treasuries to give a yield to the users. So it's actually embedded in the token. The token just keeps going up in price. It's around 3.6% yield you'll get annualized on this. So a different way to use stable coins. Obviously understand the risk behind it, but we're also looking at adding things like BUIDL, the BlackRock. We're looking at USD Athena, where they actually embed what I talk about, like cash and carry, but also funding rate from the perps in a stable coin. A very different risk profile again. But you're going to see more and more on yielding stable coins, I think, throughout all the crypto native exchanges. And the great thing is you can use Hashnote on Deribit as collateral to trade Bitcoin options or Ethereum or Solana options, etc. So a lot of potential with that. That makes a difference. I mean, over 5 years, this is going to make a big difference. You don't want to just, it's compounding interest. So.
Yeah, well, look, it's a great conversation. I think before we wrap it up, I'd love to also just know your thoughts on the market, not to put you on the spot or anything, but what are your thoughts? Have we topped now for the cycle, or do you believe that the cycle is going to still last a little bit longer and top sometime in 2025, like we typically see with those post-halving years? I know it's a complex macro environment at the moment as well, and a big change of administration within the US. So what are your thoughts?
Yeah, my thoughts are generally, and these are personal thoughts. It's always been be fearful when others are greedy and greedy when others are fearful. I think we've seen this huge narrative. Everything's all about Bitcoin's going up. When you start to see posts about Bitcoin's going to 200K, Bitcoin's going so on, that's when to take a moment and pause and think about it. I would actually be if I was trading, but I don't trade myself. Like these kind of things, like a strangle kind of strategy, where we could see a big breakdown as people start to profit take, start to think, okay, we might have reached the top of this cycle already. So we could see a big breakout to the downside, or a breakout to the outside, and that's where options, if you do believe in that, you could take advantage of that. I would be surprised if we are going to stay around this 95, let's say to 105K zone. It would be quite remarkable considering at how much news is coming on both sides. And one of those just has to be slightly more than the other to really tip the scales. That's just a personal thought.
Sure.
Obviously not trading advice.
Cool. Well, thank you so much for joining us, Sean. Really appreciate it. We'll definitely have you back on in the future and take another look at the markets together. But thank you so much for joining. Thank you also, Deribit, for the opportunity to trade on your platform. Great platform. Everything's working super well over there. Great also regulation around Deribit. So I think you guys are here to stay for the long term, and we'll have you on again. We'll see you on the next one. We'll quickly have a look, guys, at the rest of the market just quickly before jumping off over here. So you can see, of course, absolutely face melting run over here from the Bitcoin dominance, because of course, well, if you look at things like just quickly going on to Bitcoin over there, you can see some of what the other coins are doing. Look at that on Solana, absolutely massive meltdown over here, almost going to wipe out the previous high low that was put in at about 154. We definitely have to keep an eye out on these things. If you take a look at Ethereum as well over here, even closer to taking out the last high low at 3,000, and this is where these forced liquidations will start to come in as soon as you wick below those levels. So the bloodbath could continue, but there is always something that you can do out there, right? So an option is one thing that you can look at. Use the link in the description below. This may be my final show of the year. So I'll have to catch the rest of you, on the whale room as well. So if you're not in the whale room, jump into the whale room. I'll catch you guys over there. Otherwise, I'll see the rest of you on the shows again next year. I hope you all have an absolutely blessed Christmas time and holiday. Have a great day, everyone, and cheers for now.